Juba, Juba, I should give food now. Oh. Oh no.
Hello. Apology for coming back late. We have some technical difficulties. Can you hear me here? Can you hear me now? Can you hear me clearly now?
Prof, we can hear you clearly.
Thank you, sir.
All right.
All right. Let me welcome you to today's class again. Like I said when we started, when I first came online, that today we'll be looking at section 4 of our study, and the topic is a merger and acquisition. Okay, we'll be looking at merger and acquisition. Now, we have previously discussed business valuation, and I made mention of the fact that the foundation of merger and acquisition is business valuation. What does that then mean? It means that you cannot fall in love with merger and acquisition without having previously fallen in love with a business valuation. So if you think you can just go into merger and acquisition without knowing fully your business valuation, making a big mistake. It's better you go and revise business. So let us quickly look at before we go into solving the questions we have in the material. Merger and acquisition is basically a business combination. Combination of two or more companies that have previously been operating as separate entities, bringing them together so that they now start operating as one entity is what we call a merger and acquisition. Okay, merger is the combination of companies. Acquisition is also combination of companies, but the special case of acquisition is the fact that one company is acquiring the other. For instance, you have company A, you have company B. Company A is acquiring company B so that company B will cease from being in existence while company A will continue with its name. That is acquisition. The merger is where the two companies will come together and form an entirely new company, say company C. That is a merger. However, in financial management, we don't differentiate between merger and acquisition, especially when we are doing a solving question of merger and acquisition. So they are used interchangeably. So now, when two companies are to merge, definitely the aim of those companies coming together is the fact that they want to enjoy additional benefits. The two companies feel that, okay, if we come together and operate as one entity, we should be able to what? To have operational efficiency. And when we have operational efficiency, we should be able to derive more value than if the two of us are operating independently. So this additional benefit as a result of the merger of two companies is what we call synergy. Okay, we call it what? Synergy. So synergy is a term that is used to describe the additional benefit that will accrue to the company when two companies what come together to operate as a one entity. So the additional benefit that will accrue to the enlarged company is what we call synergy. So basically it is given as 2 plus 2 is equal to 5. 2 plus 2 is equal to 5. So the 2 here means the result if the entities are operating separately. Entity A, if operating separately, we get 2 as its return, while B will also get 2 as its return. So 2 plus 2 will give us 4. But if the two of them combine and now form an enlarged company and now operate under that umbrella, then they get what? A benefit, which is equivalent to what? Equal to 5. So that one additional benefit is what we call the synergy. That's why I say 2 plus 2 is equal to what? It's equal to 4. Now, when you come across a question on merger and acquisition, how do you approach such a question? Okay, how do you approach such a question? The first thing is that you must value. That's step one. I'm giving you the steps now. Okay, step one is that you go and what? Compute the market value. I believe you are with your jotter and your biro, please, so that you can jot. The steps involved in merger and acquisition is what I'm giving you right now. I said step one is what? Compute the pre-acquisition market value of the two companies. Okay, what are we saying here? You are going to compute the market price of the individual companies in the merging arrangement. Okay, company A want to merge with company B. The first thing that you are going to do is that you compute the market value, the present market value before the merger of company A. You also compute the market value of company B before the merger. These market values are what we refer to as pre-acquisition market value before acquisition. Okay, pre-acquisition market value, which is what? Market value before acquisition. Now we have discussed all methods of business evaluation. So don't ask me, how do we compute the market value? Because we have done business valuation. Okay, so all the methods we described earlier under business valuation can apply to what? To the pre-acquisition market value that we are computing. So it depends on the tune of the question or the method the examiner asks you to use. If the examiner does not specify a particular method to use, then it will be obvious in the question the method that you should use. So it demands that you know all the various models for business valuation. Now, having computed the pre-acquisition market value, you go to step 2. Step 2 is where you are going to compute the market value of the combined companies. We call it what? Post-acquisition market value. Post-acquisition market value. A post-acquisition market value is the market value that the combined companies will generate after they have been what? Combined. After the merger, okay? After the merger of these two companies, what is going to be the market price of the enlarged company, okay? Of the enlarged company. That is what we call the post-acquisition market value or post-acquisition market price. The post-acquisition market value should take cognizance of any acquisition benefit that is going to arise on the combination. Okay, the examiner will let you know if there is going to be any acquisition benefit that will arise. The examiner will specifically state that. Okay, now after you have computed your pre-acquisition market price and you have computed your post-acquisition market price, you can now determine whether that acquisition is going to be profitable. How will you know? Add the pre-acquisition market value of the two companies together. Let me repeat it. The pre-acquisition market value of the two companies that you have first computed, add them together. Deduct it from the post-acquisition market price. If you have a positive figure, okay, as the difference, then it means the acquisition is what? Is worthwhile. That is, if the post-acquisition market price is higher than the pre-acquisition market price, then we say the acquisition is, or the combination or the merger is what? Is beneficial. If, however, the market price before acquisition is higher than the market price after acquisition, then we say the acquisition will what? Will reduce the market value of the share, the wealth of shareholders. It means the acquisition is not beneficial to the shareholders. Okay, so that is how to what? That is just brief of how to go about your business valuation. Now, when we solve this, we are going to get some unconventional, okay, unconventional method. But whatever method you are going to use, definitely, I'm not saying method of business evaluation, method of there may be some additional questions that you cannot have the procedure, okay, intact, because they are non-conventional. That's what I'm talking about. So as we approach those questions, I will let you know the strategy, the method, and the what, and the techniques of dealing with such a situation. So let us take our question number one. Let us take our question number one. Let us look at the requirement of that question. Required, estimate the percentage gain on a Dentroco share under each of the above three payment methods. Comment on the answers obtained. Please, before I continue, let me tell you that you need to take this question as well as seriously as possible. Okay, take it as seriously as possible, please. Take it as seriously as possible. Make sure you understand it. Do not cram. Make sure you understand it, because it is what? It is a technical question, and you can come across a similar question, even if not exactly the same thing. It is what? 70–80% similar to this. So that is why you need to understand how to approach this type of question. So we are asked to estimate the percentage gain on a Dentroco share under each of the above three payment methods. Comment on the answers obtained. Comment on the answers obtained. So let's see the question itself. Sigraco is a listed company producing confectionery products, which it sells around the world. It wants to acquire Dentroco. Now, in this situation, Sigraco will be my predator. Predator is the company that is acquiring the other company. Okay, so Sigraco is the one that is acquiring. So Sigraco is the predator, or you call Sigraco the acquirer. Okay, you call Sigraco what? Either the predator, or you refer to it as the acquirer, the company that is acquiring the other. Okay, Dentroco is the target company or the acquiree. Okay, Dentroco is regarded as what? As the target company or the acquiree. Let us continue. So Sigraco want to acquire Dentroco. Sigraco want to acquire Dentroco. An unlisted company producing high quality luxury chocolates. Sigraco proposes to pay for the acquisition using one of the following three methods. Using one of the following three methods. What are the methods? Method one, a cash offer of $5 per Dentroco share. Okay, meaning that the company is proposing that for 1 unit of Dentroco share, we want to pay $5 to acquire it. That is the purchase consideration, okay? That is the purchase consideration. Method two, an offer of 3 of each share for 2 of Dentroco share. That is the better. So the first one is what we call cash offer, okay? That is cash offer. The second one is what we call share for share exchange. Look at it. For every 2 shares of Dentroco, Sigraco want to issue 3 shares. So that is share for share. We what? We take away 2 shares from them. In place of the 2 shares, we give them 3. That is what we call what? An offer of 3 of each shares for 2 of Dentroco's share. And method 3, an offer of a 2% coupon bond in exchange for 16 Dentroco share. Okay, this is what? Debt of offer. We are issuing the debenture to acquire the shares of Dentroco, meaning that after the acquisition, the shareholders of Dentroco will now be having the debenture in Sigraco. Do you understand? So that is by the use of what? Debentures. An offer of a 2% coupon bond in exchange for 16 Dentroco share. The bond will be redeemed in 3 years at its par value of $100. Okay? That is the redemption value of the bond that we want to give to Dentroco. Extract from the latest financial statement of both companies are as follows. We have for Sigraco and Dentroco, sales revenue, profit before tax, taxation, profit after tax, dividend, retained earnings for the year, non-current assets, current assets, and non-current liabilities. Then we have current liabilities. We have share capital, which is what? 40 cents per share. 40 cents is the nominal value of the share. So 40 cents per share. Then we have our reserves. Reserves. Sigraco's current share price is $3.6 per share. And it has estimated that Dentroco's price to earnings ratio is 12.5% higher than Sigraco's current price to earnings ratio. Let me take it again. Sigraco's current share price is 3.6 per share, and it has estimated that Dentroco's price to earnings ratio, that is price earnings ratio, is 12.5% higher than Sigraco's current price to earnings ratio. Sigraco's non-current liabilities include a 6% bond. Sigraco's non-current liabilities include a 6% bond redeemable in 3 years' time. This information is very, very key. Okay? Redeemable in 3 years' time at par, which is currently trading at 104 per 100 nominal. So that is the information on the current debenture of Sigraco. That is information on current debenture of Sigraco. Okay. So let us continue. Sigraco estimates that it could achieve synergy savings of 30% of Dentroco's estimated equity value by eliminating duplicated administrative functions, selling excess non-current assets, and through reducing the workforce numbers. if the acquisition were successful. So Sigaco is saying that if Dentroco is acquired, then it should be able to reduce, to have some savings in the form of what? Elimination of duplicated administrative functions, or selling of what? Selling off some assets that are surplus to requirements, and what? Reducing the workforce. Now, we are now asked to compute the percentage gain to Dentroco share. See Dentro or Siga. Dentroco shareholders. Let me ask you, looking at this question and considering the fact that we have discussed extensively business valuation methods, what method do you think I will need to carry out my business valuation here? Because in merger and acquisition, there is no way you can continue without your business valuation. So the starting point is what? You computing your market value of the two companies. The two companies here are Sigraco and Dentroco. So I will have to compute the market price, okay? The current market price of Sigraco and the current market price of Dentroco. That is what we call pre-acquisition market price, okay? Pre-acquisition market price. Now, look at the information we have here. What method is suitable for the computation of the market price? However, if you look at it, the market price of Sigaco is already given. So there is no any headache for that. There is no any headache for that. That one is given directly. The one you need to compute here is the one for Dentroco. Yeah, that is brilliant. That is brilliant. You have to use the price earnings ratio. You have to use the price earnings ratio because that is glaring in the question. Don't be deceived. Look at it. Let me go back to those information extra they gave us. Now, if you look at the information, we have dividend, right? We have dividend. So you might be tempted that because we have dividend there, you want to go and use dividend valuation model, but nay, you cannot use dividend valuation model. Why? Your cost of equity is not given. Are you given cost of equity? No. And the basis for you to compute cost of equity is not given. Therefore, you cannot use dividend valuation model. Don't be deceived by that information. So that's out of it. Now, let us now go to which is price to earnings ratio. Price earnings ratio is given as what? Price earnings ratio is, who can tell me the formula for price earnings before I said, so your market price will come first before your earnings. So if I have my PER to be equal to market price per share over EPS, that is the formula. So when I make market price the subject of the formula, I should now be having what? Market price per share is equal to price earnings ratio times EPS. So when you multiply your price earnings ratio by EPS, you get market price of the company. But now, how do I get the price earnings ratio of Sigaco? How do I get that? That is the question. How do I get it? Now, the question has given you a clear information here. The question says that, and let me also tell you that it is only quoted company that can have what? That can have price earnings ratio. A company that is not quoted cannot have price earnings ratio. Okay? A company that is not quoted cannot have price earnings ratio. So, because Sigraco is quoted, okay, I think it's PSC, right? It should be a PSC. Okay, it's a listed company. Can you see that? It's a listed company. Sigraco is a listed company. So the question is not telling you that the price earnings ratio, of Sigraco, sorry, the price earnings ratio of who? Of Dentroco is 12.5% higher than Sigraco's current price to earnings ratio. So what does that imply? Before I can get the price earnings ratio of Dentroco, I must have what? Obtain the price earnings ratio of Sigraco. Hello, my host. Can you hear me, please? All right, thank you, sir. Just wanted to be sure. It's freaking. But my host has confirmed that he can hear me. So maybe the issue should be from their connectivity. Okay, but let me. Okay, it's breaking. Other student, can you hear me? Can you confirm? It's fine. Yeah, I think it's fine. Yeah, I'm going to repeat it. Don't worry. All right, thank you. Thank you. That's the situation of Nigeria. You know, sometimes our network is so unpredictable. So please, bear with me. So let us continue. The question says that the price earnings ratio of Dentroco is what? Is 12.5% higher, 12.5% higher than Sigraco's current price to earnings ratio. And I want to value Dentroco share based on price. When I get that, I will now what? Increase that price earnings ratio by 12.5%. That will be the price earnings ratio of Sigraco. Do you understand now? That will be the price earnings ratio of Sigraco. So that's what I'm going to do. Now, how do we get the price earnings ratio of Sigraco? Price earnings ratio is what? Market price per share. This is the market price per share here, 3.5. That one is already given. Now, the one that is not given now is what? Is earnings per share, EPS. EPS is not given. So we have to go and estimate and calculate our EPS. So let's go and calculate our EPS. Let's go and calculate our EPS. Mrs. Benedicta, please mute your video. Thank you. So let us go and compute our what? Our earnings per share. How is earnings per share computed? Earnings per share is profit after tax, profit after tax over what? Number of shares. Okay? It is not retained earnings. So you are not using retained earnings. You are using profit after tax because you are looking at earnings per share. Okay? So is profit after tax all over number of shares. The profit after tax of Sigraco is 4,950. Now, what is the number of shares? I go down there where I have that information on shares. 4,400 over 0.4. That will give us what? Pardon me. Let me quickly take my calculator so that we can have a bit of a live session together. Excuse me, please. Okay. So I'm back. 4,400. You can see that I make sure I'm with my calculator. So I expect you to be with your calculator too, so that we can do this thing together. That is how you can learn it. The fact that I've solved it, I still use my calculator to confirm those figures. So make sure as I'm doing it, you're also doing it along so that you can get a better understanding of it. Do you understand? So that's the way to go about it. So we have 4,400 all over 0.4. That will give us what? 11,000, right? So I will now say that my price earnings ratio is 4,950, 4,950 all over 11,000. That gives me what? 0.45. 0.45 is the price earnings ratio of who? Of Sigraco. Is the price earnings ratio of Sigraco. But the price earnings ratio I need is for who? Is price earnings ratio of Dentroco. And the question has already told me that the price earnings ratio of Dentroco is what? 12.5%. 12.5% higher than the price earnings ratio of Sigraco. Therefore, it means that I will multiply 0.45 by 1.125. That is 112.5%. So times 1.125, we have 0.51 approximately. Now, price earnings ratio is in number of times, not in value, not in monetary value. Neither is it in percentage, it's times. So we have been able to discover that Sigraco's price earnings ratio is 0.45, while Dentroco price earnings ratio is 0.51, right? Now, I can now go ahead now and compute the earnings per share of Dentroco, because market price per share is price earnings ratio multiplied by EPS. So I have gotten the price earnings ratio. I need the what? I need the EPS. So how will I get my EPS? The same thing you did to Sigraco. What is the number of shares? The profit after tax, 625. What is the number of shares? Let's go and compute it. We have 500 all over 0.4. That is 1,250. So 6 what? 665. We're going to confirm that. 625. So 625. Excuse me. One minute, please. Okay. 500 divided by 0.4. 1,250. So I have 625 over 1,250. That is giving me what? 0.5. Am I correct? 0.5. 0.5. So if that is the case, it means the market price per share of Dentroco is 0.51, which is the price earnings ratio, multiplied by EPS 0.5. So 0.55 times 0.5 is what? Is 0.26 approximately. Is 0.26. Are you sure that is correct? Okay, it's correct, right? Correct. Which couple? Now, you say I should recap. We have computed our price earnings ratio to be 0.51 using price earnings ratio of what do you call it? Sigako as the basis. We need our EPS. Our EPS is 625, which is profit after tax, all over number of shares. What is our number of shares? Number of shares is 500 over 0.4. 500 over 0.4 is what gave us 1,250. So divide 6,625 by 1,250. We have 0.5. So market price per share is now 0.51 times 0.5. 0.51 over 0.5. Okay, 0.51 over 0.5 will give us our what? Our market price. Okay, now having gotten our market price now, we can now go and start looking at the various settlement options. So let's go there and see. Now, we have, look at what we did here. Sigraco's price earnings ratio, market value of Sigraco, number of share times. Okay, this just in total. This just in total. That's if you do it in total. So that's if you do it in what? In total. I bet we should have the same thing. What happened? Let's go back. You have I'm sure I've not picked the wrong figure. Profit after tax. Profit after tax over 3.6. 3.6 over 1 minute, please. 3.6. Okay, it should be fine. So what we did there is that we use the what? The total instead of per unit. Okay, instead of per unit. You know the market value of Sigaco in total, because per unit is what? 3.6. When you multiply, you get what? You get 39,600. So it's still the same approach. You arrive at the same thing. Now, for the market value of Dentro O, we have jumped. Sorry, why is this thing jumping like this? Okay, this is where we are. So this is, I think we are good. Number of Sigaco shares is what? It's 11,000. So market value of Sigaco shares, this times is 39,600. That's in total. So price earnings ratio, you can say, what do they use here? We use 39,600 over what? Over 4,950, 4,950,000. 8 times. How did you get 0.55 before? 3.9 market price of EPS. What was the EPS we got? Our EPS was 0.5, Abi. So market price earnings ratio should be 3.9 divided by 0. So the earlier figure we got is not correct then. It's not correct. Let's go to where we have that figure. Because whether you use the total or use per unit, you should get the same, you should arrive at the same thing. Let's look at our earnings per share. 4,950 divided by 11,000 is 0.45. Oh, 0.55 is the earnings per share, not price earnings ratio. 0.45. So what is the market price? 3.9. Abi, current market price divided by 0.45. So that's correct. So the figure we got before is 0.45 is the what? Is the price earnings ratio. So divide the current market price, which is what? 3.6 by 0.45, you get 8. 3.6 divided by 0.45, you have 8. So the price earnings ratio is 8. So, you know, I said that whether you use the per unit or you use the total, you should get the same one, the same figure. So it's now your choice whether you have chosen to use the total or you have chosen to use what? The per unit. So the total market value is 39.6 million, and the market value of that ROCO is what? 1,250 times okay. Market value of Sigaco is this. The price earnings ratio is now what? 8, which is what? The total market price over what? Over the earnings per share, which is total earnings. We use total in this case. Total market value over total earnings will give you 8. Market price per share over earnings per share will still give you that same 8. You understand? So whether you use the total or you use per unit, you are still getting the same figure. So then true cost price earnings ratio will now be 1.125 times 8, which is what? Which is 9, supposed to be 9. So the price earnings ratio, the dental cost market price now will now be what? Will now be number of shares, which is completed as what? 1,250. And what? Dental cost EPS is 625 times over 1,250, which is what? 50 cents, which is the same 0.5 we computed before. So dental cost market price per share is 0.5 times 9, which is what? 4.5. Did you understand this? Yes. That's the correct figure. That's the correct figure. The 0.45 is the earnings per share. Is the earnings per share. So the market price per share over earnings per share is what is given. That's what? That's 8. So times 1.125 will give you 9 for Dentroco. I believe that is clear. So let us continue. Now we can now go and evaluate the what? The 3 payment offer or method. The first one is what? A cash payment of $5. Abi, if you want to pay this using cash, we want to pay 5 naira for each share that we are acquiring from Dentroco. Now, what does that imply? The shares of Dentroco currently is what? $4.5 per share. But we are now paying 5 naira for the acquisition. What does that mean? It means a share that is worth 4.5 is being bought at what? 5. So they are gaining what? 50 kobo. Sorry, 50 cents in this case because we are using dollar. So the shareholders of Dentroco will be gaining 50 cents on each of their shares. They will be gaining 50 cents on each of their shares. Do you understand? So what is the percentage gain? Percentage gain is now gain per share over pre-acquisition market price times 100. So come and see the solution here. So the percentage gain under cash value, you can see this is the cash offer, $5, current share price 5 naira. So what are they gaining? They are gaining 50 cents because we are paying them higher than the worth of their shares. So they are gaining 50 cents. So if they are gaining 50 cents, what is the percentage gain? The percentage gain is the amount of gain, which is 0.5, all over the worth of their share before acquisition, which is 4.5. So they are gaining 11.11%. 11.11%. Okay. Now, I believe this is clear. I believe this is clear. Cash offer is always very straightforward. The moment you can get the pre-acquisition market price of the target company, you are good to go, because the cash to be paid will be specified in the question. Okay. Now, a question might tell you, let me take it one by one. A question might ask you that, what is the advantages and disadvantages of cash offer as a means of settlement, as a what? A purchase consideration, as a means of buying the shares of the company. What are the advantages and what are the disadvantages? Now, sometimes the question will make it broad, and sometimes it will be narrowed down. Now, it will be broad if the question just asks you, what are the advantages and disadvantages of the cash offer as a means of making the payment? Broad is the sense that you'll be looking at the benefit and the drawback from the point of view of the acquirer and the acquiree. You look at the disadvantage to Dentroco and advantages to Dentroco. You look at advantages to Sigraco and disadvantages to Sigraco. That is if the question is broad. But if it is narrowed than that, what is the advantages of the and disadvantages of the cash offer to Sigraco? Then you only tailor your solution to Sigraco. And if the question is directed to Sigraco, you tailor your solution to Dentroco. You understand now? Now, I'm going to give you the two. Let's start with Dentroco, the target. Let's start with the target. What are the advantages to Dentroco? One, the amount that Dentroco's shareholder will collect on their shares is certain. Okay, you know, is cash. So you are sure of the amount you are collecting as a shareholder if the payment is to be made through cash offer. I believe you are writing. Okay, so that is the advantage. The second advantage you can think of is the fact that okay, that's not advantage, that is disadvantage. Now, this is basically the advantage of cash offer to Dentroco shareholders. What about the disadvantage? The disadvantage is that the consideration received will be subject to capital gains tax immediately. Because you are selling your shares, capital gains tax will arise on the sales, isn't it? Selling price minus the what? The cost 4.5 minus the what? Purchase consideration of 5. You are making a profit of 0.5. So you are going to pay capital gains tax on it. So that is the disadvantage. Okay, that is the disadvantage. That is the disadvantage. So let us now come to Sigraco. For Sigraco, the first advantage that you will think of is the fact that the company will be able to avoid dilution of earnings. Okay? Dilution of earnings will occur where the number of shares will increase. Okay? But earnings will remain the same. Your earnings will be diluted. So if you are going to pay cash to acquire Dentroco, you are not issuing shares, your number of shares will not increase. So your earnings will not be diluted. Two, there will not be dilution of control. You have not issued additional shares, so number of shareholders will not increase. Therefore, control will still remain in the hand of the existing shareholders. Your control is not diluted. Can you see that? So the company will avoid what? Dilution of earnings, and it will equally avoid dilution of control. These are the advantages to who? To Sigraco. But what is the disadvantage? The disadvantage here is that the company's cash flow position will be affected because you are paying cash. Your cash flow position will be affected. Your cash flow position will drop because of the cash payment. That is the disadvantage. Hello, my host, can you hear me, please? Can you people hear me? You can hear me. So, Oreoluwa, you may need to restart your system, please. You may need to restart your system. The fault should be from your own connectivity. So let us continue. So these are the advantages and disadvantages of cash offer to both the acquirer, that is the acquirer who is a Sigra, and the acquiree who is a Dentroco in this situation. Now let me tell you, please, that we are going to hold a makeup class on Sunday from 12 to 2. Okay, I've gotten that clearance from FCA management. So there's going to be a makeup class on Sunday, 12 to 2. 12 to 2. Please take note. Put it in your calendar. Thank you. So let us continue. That is that about the first one, method of payment. Method of payment. The second method of payment is what? Is an offer of 3 of each share for 2 of Dentroco's shares. Okay? Now, this is what should happen. We want to give Dentroco 3 shares for what? For 2. So the ratio is what? The ratio is 3/2. The ratio is 3/2. Now, the same topic we are discussing, we can't finish merger and acquisition this time. You can see we have 3 questions and we are still on question number 1. So it's on merger and acquisition. We are going to complete the remaining questions. Or you want me to leave it to you to go and solve? So that you just send your solution to me. Is that fine by you? Mr. Ahmed, from 12 to 2. From 12 to 2 on Sunday. Okay? From 12 to 2 on Sunday. Mr. Ahmed, welcome back from Kenya. Are you back now? You are still in Kenya. You chop money for Kenya. That is good. Just bring money for us here in Nigeria, okay? So let us continue. I said the ratio is going to be what? 3/2. So to get the number of shares that we need to offer to Dentroco, what will you do? You multiply the ratio by the present number of shares of Dentroco. Number of shares presently is 1,250. So we're going to have 3/2 times 1,250. So we are offering 1,875 shares. Can you see? We are offering 1,875 shares to acquire Dentroco. Okay, that is the result of our 3/2. 3/2. Okay, we are giving them 3 shares in replacement for what? Their 2 shares. So that will result in 1,875 shares being issued to them. Now, the question I will now ask is, this 1,875 shares, at what value will it be will they be valued? Okay, at what market price will I value them? That's the next question you ask yourself. The value you are going to place on them is not the pre-acquisition market value. The reason is this: the moment you offer these shares to them, they become shareholders of the new company, and they will only become shareholders after the what? After the acquisition. So it is expected that 1,875 is their shares after what? After acquisition. Therefore, you are going to value the number of shares using post-acquisition market price per share. Okay? Using what? Post-acquisition market price per share. And how will you get the post-acquisition market price per share? This is what you are going to do. You will add the market value before acquisition of Dentroco. You will add it to the pre-acquisition market price of Sigraco. Then you now look for the synergy that the question discussed here. Look at it. The question gave us the benefit here. You can say it want to acquire Dentroco. No. I think it's the next paragraph down there. Look at it. It is believed, okay, Sigraco estimate that it could achieve what? Synergy saving of 30% of Dentroco's estimated equity value by eliminating duplicated administrative blah, 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 blah. Now, that means that for present market value of Dentroco, which is pre-acquisition market price, I will compute 30% of it. That is what? That is the additional benefit Sigraco is looking at. So I will add it to the pre-acquisition market price of Dentroco, pre-acquisition market price of who? Of Sigraco. So making three items I'm going to add together. Let me repeat it. The item you are going to add together is pre-acquisition market price of Sigraco, pre-acquisition market price of Dentroco, plus what? The synergy saving. The synergy, which is equal to what? Which is equal to 30% of the pre-acquisition market price of Dentroco. Now, we have computed the market price here before. Let's go and look at it. See, this is pre-acquisition market price of Sigraco is this. Can you see that? Then for Dentroco, this is okay. For Dentroco, is going to be 4.5 times 1,250,000. Okay, 1,250,000, which is 5,625,000. So if Dentroco's pre-acquisition market price is 5,625,000, then I will multiply by what? 0.3 to get the additional benefit, which is what? 1,687,500. So the total I'm going to add now is the 1,867,500 plus 5,625,000 plus that of Sigraco, which is what? 39,600,000. So we have 46,912,500. Now, this 46,912,500 is the post-acquisition, get me clear, post-acquisition market value of the combined companies. Okay? Post-acquisition market price of the combined company is 46,912,500. Do we understand that? Now, when you get the post-acquisition market price of the shares, the next thing is, what is the post-acquisition number of shares? The post-acquisition number of shares is simply the amount of shares you are issued to Dentroco, which is what? I think we computed it before. Is what? 3/2 times 1,250,000, which is what? 1,875,000. Add it to the number of shares of Sigraco, which is what? 11 million. So the post-acquisition number of shares is 12,875,000. Now, what will now be the post-acquisition market price per share? Post-acquisition market price per share will now be post-acquisition market value of shares all over post-acquisition number of shares. So I will have 46,912.5 divided by 12,875. That will give me 3.64. So it means after the acquisition, the market price of the combined company share will now be 3.64 a share. Now, so now, no problem. Let's go to the solution. I prefer you understanding it before I show you the solution. That's just it. If you understand it, the solution should not be your problem. But since you don't understand, let's go to the share exchange and see what I'm talking about. What is well there? This is a very straightforward question. Okay, straightforward. There's nothing, no well here. We have not dug any well at all. Now, share exchange. Let's explain it from here. Now, let's get it from here. We want to do share exchange, Abby. We want to do share exchange. Now, if you want to do share exchange, look at the share exchange here, the one I computed earlier. How many shares do we exchange with Dentroco shareholders? The question says we are giving them 3 in place of 2, Abby. So what you are going to do is you will divide the current number of their share by 2. The current share they have is what? Is 1,875,000 divided by 2. So we are now giving them 3 multiplied by 3. Do you understand? Let me come again. Okay, no, it's 1,250. Divide 1,250,000 shares by 2. We get 625,000. Now multiply by 3. That will give you the number of shares we should offer to Dentroco shareholders. So we are offering them 1,875,000 shares. Look at it here. Is that clear? Is that one clear? Is that one clear? Is this one here clear, please? Do you know how we got this one now? All right. Now, let us now take this next step. Now, after acquisition, what will be the total number of shares? The total number of shares after acquisition should be the summation of the number of shares, original number of shares of Sigraco, which is 11,000, plus the number of shares we offer to acquire Dentroco. That is 11 million plus 1,875. That is 12,875. That is what we got here. So it is the addition of this, okay? Addition of this, which is the number of shares we are offering to them, and this, which is the number of shares of the acquirer, that is giving us what we call post-acquisition number of shares of 12,875,000. I believe that is very, very clear. I have sent this material since Monday, I think. Yeah, I sent it since Monday. I sent it since Monday. So let us continue. So now, having got our post-acquisition number of shares, now we now have to get our what? Our post-acquisition market value of shares. Post-acquisition market value of what? Of shares. Now, this is the current price of Sigraco share. This is the current market price of Dentroco shares. And the question says we are going to achieve synergy saving of 30% of what? Of the current share price of Dentroco. So multiply that 30% by 5.625. That is what gave us 1,688,000. So my market value of the combined company now, okay, market value of combined company is the same thing as market value post-acquisition. Is the addition of 1, 2, 3. That's what gave us this. Okay, that's what gave us this value. Do you understand now? Now, what is now the market price per share? You know, this one is the total market price of the company share. So what is the market price per share after acquisition? The market price per share after acquisition is now market price after acquisition in total over total number of shares after acquisition. And that is what gave us 3.64. 3.64. Now look at it. How do I now get whether there is gain or loss? I collected 2 shares from this company, and the 2 shares were valued at what? 4.5 each, right? So it means what I bought is 4.5 times 2, which is 9. But I now pay them with what? 3 shares, and each of the 3 shares is valued at 3.64. So 3.64 times 3 is 10.92. So are they not gaining? Look at it. Look at the gain now. So Dentroco 3 shares in combined company. They collected 3 shares. The 3 shares they collected is valued at 10.92. And the share they gave up is what? 2. The share they gave up were valued at 4.5. 4.5 times 2 is what? Is 9. You can see that they are gaining. What is the gain? 1.92, right? That is the gain. Can you see that? This is the gain. So if that is the gain, what is now the percentage gain? Okay. Bukola, now I want you to go back and add EPS of before acquisition. EPS of Dentro, EPS of Sigra, and plus the synergy. EPS is different from market price. So I don't know why we go and add EPS in place of a market price. So it's better you get used to what I'm explaining to you here, rather than try to look for alternative that will create issue for you. So market price is different from EPS. If you go and you now start adding EPS, you are not computing market value. So let us continue. So the percentage gain will now be 1 point what? This percentage gain, okay? Look at it here. The percentage gain here will now be what? 1.92 over 9. You can see that I didn't say over 4.5. Why did I not say over 1.5? Because the shares that produce this profit of 1.92 are 2 shares. Okay, what we gave up to get this profit of 1.92 are what? 2 shares. And the 2 shares were valued at 4.5 each. So the total value we gave up for us to get this gain of 1.92 is 9. So the percentage gain is going to be over 9, not over 4.5. I believe that is clear. So we have 1.92 over 9 times 100%. So the gain is 21.33%. Okay, 21.33%. Now, let me quickly tell you this. When you are computing, we are carrying out business evaluation using price earnings ratio, either price earnings ratio, earnings yield, or dividend yield. To get the post-acquisition market price, there's no two way about it. Is the addition of the pre-acquisition market price of the separate companies plus any synergy. There's no two way about it. But if we are using cash flow, okay, if you are using cash flow or dividend valuation method, then the question might give you the dividend post-acquisition. So you have to go and do valuation after acquisition as well. But if it is price earnings ratio, dividend yield, earnings yield, the post-acquisition market value is the addition of individual market price of the market price of individual companies plus any expected synergy on the acquisition. So I'm telling you this so that you know when you should be adding figures together. Please take note. Now, the next one is what? Is the third one, where we are told that the third offer, an offer of a 2% coupon bond in exchange for 16 Detrocos shares. The bond will be redeemed in 3 years at each par value of 100. Now, this information alone does not make any sense to me. Okay? Why does it not make any sense? Because the first thing I need to do is that I need to know the worth of the bond that I am given as what? A purchase consideration to acquire the company's share. I must know the worth of that bond. The worth of the bond is what? Is the market value, isn't it? Is the market price. Yes, Shubola, 125%. Sorry, is 125? 112.5% rather. 112.5%. Yes, that's what gave us that 1.125. You are correct. Yeah. So I need to get what? This bond that I want to issue. Please take note. Anytime a question is telling you that a bond will be used as a purchase consideration to acquire a company share, the first thing you must know is what the price of the bond that you want to use for the exchange. You must know it. Okay, but for me to get market price of debt of debenture, for me to get market price of debenture or bonds, what do I need to do? I need to discount interest of the bond and also discount the what? The redemption value, right? And for me to discount interest and redemption value, I need to know the cost of bond. True or false? Now, for me to, okay, let me take it again so that you understand what I'm saying. My colleague has already taught you bonds valuation. True or false? He has let you know that for you to get the market price of bonds, you will compute the interest on the bond, you discount it using cost of the bond, Abi? And you also discount the redemption value using cost of the bond. right? Now, in this question, I am not given cost of bond. I can compute my interest quite fine. 2% of 100 is my interest, which is 2 naira. But do I have cost of bond for me to discount? No. So what do I do? What you are going to do is this. If you look at the question further, the question gave you another bond here. Look at it. The question says Sigraco's no current liability include 6% bond redeemable in 3 years at par, which is currently trading at 104 per 100 per value. Consider that. Now, my assumption now is that the bonds I want to offer to the shareholders of Dentroco and my existing bond of 6% are of similar risk characteristics. Two bonds of the same risk class. I believe it will have also said this to you. I'm very, very sure. Two bonds of the same risk class will have the same cost. Two bonds of the same risk class will have the same cost. So my assumption here is that my existing bond of 6% and the 2% bond I want to issue to the shareholders of Dentroco are having the same level of risk. Therefore, if I compute the cost of the existing bond, it will be the same thing as the cost of the bond I want to issue. So, and in this question, it is very possible for me to compute the cost of my existing bond. How do I do that? You use your internal rate of return interpolation formula. Cost of bond. He has discussed cost of bond with you and what? Computation of market value of bond. With cash flow. I beg, forget about cash flow first. When we get to cash flow, we cross that bridge. Okay? We cross that bridge. Now, let us now go and compute our market price, our cost of bond. Look at it. Bond offer. The bond offer is what? The market value of the bond was not given, but Sigraco has other bond with what? A coupon rate of 6% and market value of 104 per 100 par value. The market value of the redeemable bond is the present value of interest and redemption value using cost of debt. Cost of debt is something as well, the redemption yield or internal rate of return at the discount rate. We are assuming that the cost of the 6% bond is the same as the cost of the 2% bond. That is the assumption here. If the question says, state the assumptions you have made, that is the assumption we are going to give to the examiner. So, let us compute the cost of the bond. Our interest is 6. Okay? Please, when we are doing bond valuation here, bond valuation is not, when you are computing your redemption yield, okay, or your yield to maturity, you are not taking it after tax. It is different from the normal cost of bond you compute when you are computing your weighted average cost of capital. Here, I am not computing weighted average cost of capital. So I'm not going to say interest 1 minus tax rate. Do you understand? That's why you see the whole interest as 6 in the question. So from year 1 to 3, because we are told that the bond will have 3 years maturity, right? So my host, please can you confirm that you can hear me? Hello, can you hear me here? Can you confirm that you can hear me? Yes, okay. So if you can't hear me, the issue should be from your own connectivity. You may have to restart your device. So the market price of the bond is what? 104. When we are computing cost of bond, all this one, they are just rollover. I'm rolling it over. I'm not going to waste time on them. They are rollover from a bond valuation. So market price year 0, 104. Interest year 1 to 3, which is 6. It is going to be redeemed at par value of 100. So you assume any two discount rate of your choice. Please don't start calling me that, how did you get 5 and 3%? Don't start calling me, how did I get 5 and 3%? You can change the 5 and 3%, put your own rate, you still get approximately the same thing. So when you are doing IRR, you are what? You are going to assume any two rate of your choice. So I assume 5% here. 5% year 0 is 1. Year 1 to 3 annuity factor 2.723, and year 3 0.864. When you multiply, we get our present value NPV as what? Negative 1.26. So I now use what? 3%. I do the same thing. I have my NPV to be what? 4.47. I've told you I'm not wasting time here because it's purely bond valuation. So go and use your internal rate of return formula. Lower rate plus NPV of lower rate over lower rate minus NPV of higher rate. So that's what changed it to what? Plus. So we have plus 1.26 times 5 minus 3. So when you evaluate this, we have 4.56%. So I now have my cost of bond, Abby. Since I have my cost of bond now, I can compute the market value of the bond I want to issue to Dentroco. And how will I now do that? I will go and discount all the what? Interest using the cost of bond, like I explained earlier. Okay, look at it. Value of the 2% bond is the 2% bond I want to issue to acquire Dentroco. So year 1, I will collect interest. Year 2, I collect interest. Year 3, I will collect interest and redemption value. So that is what makes it what? 102. So when you discount using the cost of the bond, we have 1.912, 1.83, and what? And 89.25. When you add these three together, you have 92.992, approximately $93. So approximately $93. It therefore means that the market price of the bond we want to issue to Dentroco shareholders is valued at what? $93 per unit. Now look at it. A bond that is worth 93.0. We want to issue it in place of what? 16 shares. That is what the question says. Let's go to that question you see. We want to issue that bond to acquire 16 shares. Okay? An offer of 2% coupon bond in exchange for what? 16 Dentroco shares. 16 shares. So one bond will be used to acquire 16 shares. Now, I will now come here. Let's go back to what we are doing there. Now, if I want to acquire 16 shares using 93 Naira bond, so what will be the amount per share is 93 over 16. So it means I will be paying 5.8 per share, 5.81 per share. That's what it means. Because 93 shares will buy 16 shares. Divide that 93 by 16, we have 5.81. So using bond, look at the instruction here, the information rather. Using bond with a value of 93 to pay for 16 shares represent a price per share of what? 93 over 16, which is 5.81 per share. So that is the price. That's the equivalent price. And look at it. What is the current share price? 4.5. So what are we gaining? What are we gaining? Our gain is 1.31, that is 5.81, the amount we are paying, okay, minus the cost of the shares. Mr. Taiwo Danro, easy. I can see you are driving. So, can you mute? Just make sure you concentrate on your driving. Safe journey. Okay, let us continue. So, we have 1.31 as our gain. So if 1.31 is our gain, what is the percentage gain? Percentage gain is the gain per share over what? The pre-acquisition market price times 100. They gain 29.1%. They gain 29.1%. Sheyi. Yes, it's when we are computing work that you are going to say interest 1 minus tax to compute your cost of debt. But if you are doing bond valuation, the question says compute yield to maturity. You are not doing 1 minus tax. You are wrong, though. If you are computing yield to maturity, you know yield to maturity is also called what? Redemption yield, Abi, or internal rate of return. So when you are computing your yield to maturity, you are not using your interest net of tax. Is the gross amount of interest that you are going to use for the computation. That is the first question you ask, Abi. The second question you said, how is it again? We are looking at it from the perspective of Dentroco, not perspective of Sigraco. So it's a gain to Dentroco shareholders because their share is worth 4.5, but we are paying 5. It. So it's a gain to them, to Dentroco shareholder. Please. What was part? Because this is where you bring in your professional judgment. Because the comment on your look at it, comment on the answers obtained. What do you think the question I want you to comment on? The question wants you to compare the 3 payment offer. Okay, compare the 3 payment offer. Now let me quickly tell you that if we are looking at share exchange, what is the disadvantage? Sorry, the advantage to Dentroco. The advantage to Dentroco is that it enables Dentroco to automatically become shareholders of the large company. Okay, they will not be shareholders of the large company of Sigraco. That is the advantage to them. Number 2 is that they will avoid capital gains tax because the payment is not going to be through cash. It's share for share. No gain will be recorded in terms of cash. So they will avoid capital gains tax. But what is the disadvantage to them? The disadvantage to them is that the future market price of their share is what? Is uncertain because share price fluctuates, isn't it? So after the acquisition, the market price may drop beyond what is expected. Therefore, creating uncertainty as to the value they are going to get on their shares. You understand? That is the disadvantage to them. What is the advantage to Dentroco, Sigraco? To Sigraco, my host, please, 1 minute, please. Pardon me. To Sigraco, they will be able to preserve their cash flow position because they are not what? They are not paying cash. So their cash flow position is preserved. Okay, is preserved. Now, what is the advantage to them? The disadvantage is that any share will be diluted and control will equally be diluted. Okay, control will equally be diluted. So what about for the bond? For the bond, of course, because it is bond, to Dentroco, they are certain as to what? Their income on the debt. Okay, they are certain as to their income on the debt. And also, just like what we have under share exchange, they avoid capital gains tax instantly. Okay, while for SIGRACO, like we have it in the share for share exchange, it does not involve payment. However, if the debt is a convertible debt, then it's going to be what? An hybrid financial instrument, an hybrid financial instrument. Therefore, it can create a potential dilution of earnings should the what? Should the debt holder decide to convert the debt to shares in the future. So I don't want to rush the remaining part. We are going to take it when we meet on Sunday. Once again, our class on Sunday is going to be from 12 to 2. Instead of this co and co. I rush, Avi. Okay, don't worry. In our next class, I'm still going to repeat it, Farida, don't worry. I will repeat the advantages and disadvantages again before I explain the what? The comment. Then we now go to the subsequent, the remaining 2 questions. So 12 to 2 on Sunday by the special grace of God. Until then, let's call it a day on this platform. God bless you, and I wish you success in your exam. Bye. If you have questions, you can chat me, please. All right, my host.
Ended. From family as the class ended.